Something has changed in the market structure, and most people are missing this. With the recent sell-off, we have run through several potential supports. The short-term holder cost basis, that's in red, the active realized price, that's in yellow, and also the true market mean, that's in green. The only barrier that's left is the realized price, the line in blue. Here's a longer-term chart of the realized price. Bear markets tend to bottom out below that price level. So that was true in 2018 after the ICO bubble popped. That was also true in 2020 during the COVID crash. It happened one more time in 2022 after Terra Luna, Three Arrows Capital and FTX went belly up. And it appears as if we are again on our merry way down, with the potential price target being $55,000. Now that's just one way to look at the situation. This is the general realized price, so the average cost basis of all holders in the entire market. I think the reason why the price bottoms out below that level is because that's when the selling pressure tends to ease. Whenever we are above the average cost basis, that means people can still take profit. And when the momentum shifts around, that profit simply gets realized. When we are below the average cost basis, now it's about realizing losses, not realizing gains. And if you long-term believe in Bitcoin, if you long-term believe that Bitcoin will outperform the US dollar because its supply expands less quickly, then you might simply just hold during tough times like this and wait for the recovery. Now that's the overall realized price. Here is the realized price of only the long-term holders. And interestingly enough, we tended to also fall below that cost basis with every bear market. And surprise, surprise, the long-term holder realized cost basis tends to adjust a bit slower. And so that level is currently at $40,000. A lot of transactions have been made above the current price level. So everybody that's still in profit is a very long-term holder that bought in the early days. Here we've got a price distribution chart. So how many Bitcoin have moved at which particular Bitcoin price? So the price this time is at the x-axis, not at the y-axis. Instead, on the y-axis, we see the number of BTC. Here is the current price, and we see a lot of Bitcoin moved above the current price. So many people are currently in losses. The market overall is still in profit, but that's just because some holders bought at extremely low prices and did not let go. But they might over time, and that's the problem. Over the last 2 years, we had a quite nice price appreciation of Bitcoin. Every now and then we did have our retracements, but prior retracements were different to the current one. Here is the realized losses. And while there were some realized losses during prior corrections, so when we went from 72K down to 55, and when we went from 100K down to 75, there were some pessimistic holders that realized their losses. This time though, it's different. The loss realization is happening much more aggressively since the beginning of that drawdown already. In other words, the conviction that this is the beginning of a bear market is much, much higher this time compared to the correction we have seen before. People just want to get out and are okay to realize some losses. Everybody that's realizing losses is, of course, rather a shorter term trader, right? A trader that bought in the last few months. Have a look at the unrealized losses. This is now a longer term chart. When this peaks, so there's a lot of red in the portfolios without having sold, that's potentially the end of a bear market. We've seen this in 2018, we've seen this in 2022, and we're just slowly starting to build up that unrealized loss. People are rather panic selling now, trying to avoid the losses. That of course then accelerates the negative momentum, and it has to accelerate to a degree to get to similar kinds of unrealized loss levels again, at least if history was to repeat itself. One of the reasons why we see so much negative momentum is not just the long-term holders taking profit, it's also the larger institutions offloading Bitcoin. This here is the digital asset treasury net flows. So we've got the company treasuries, that's in blue, so that's the Michael Saylors of this world. We've got the government treasuries, that's in red, and we've got the spot ETF flows. That's in light green or in turquoise. All of those entities are recently offloading their stack. Usually, the spot trading volume tends to go up when prices go up. In other words, there's more and more interest in crypto as prices appreciate. More people want to be part of the party. And as the price declines, attention and trading volume on the spot market declines as well. We've seen this multiple times, but this time is different. This time, the trading volume is actually going up while the price is going down. So we could interpret this as panic selling. The offloading is happening faster compared to prior corrections in the last 2 years. Now, I'm surprised how most people still don't understand how the macro defines everything. When Bitcoin is going down, then all the altcoins go down with it. And while you can try to pick an individual altcoin that might be a winner, that's probably long-term a losing battle. And so really, figuring out where the macro is headed is the most important consideration. It doesn't matter what cryptocurrency it is. When Bitcoin drops by more than 80%, any portfolio gets crushed. And these kind of moves happen regularly. The last time was when Terra Luna and FTX went belly up, a drop of more than 77%. And so it's very clear that crypto moves in those trends. Some people even think that it's 4-year trends, right? 4-year cycles. This might become a self-fulfilling prophecy. I'm not willing to go that far, but there are clearly overarching trends, and I try to time them in a way. The very straightforward way is using moving averages, right? Here, for example, we've got the 200-day simple moving average in Bitcoin. We can bet on rising prices whenever the price is above. We can bet on falling prices whenever the price is below. And so that way, we avoid quite a bit of the bear market. The question then becomes, what is the best moving average duration? Should we take the 200-day moving average, or should we potentially go shorter? Maybe it's the 175-day that's better. Maybe it's the 150-day that's better. What moving average duration historically worked the best? Should we maybe take just the 100-day? We're getting closer and closer to the price as we reduce the moving average duration. And it seems to have its advantages, right? We tend to enter a bit earlier when the moving average is shorter. But then we also get this random noise every now and then where you go above and below and above and below the moving average again. So I made a calculation to find out the best moving average for Bitcoin. There are 2 data points that are interesting. The one over here, the 44-day simple moving average. So on the x-axis is the moving average duration. On the y-axis is the annualized performance. The black line here is the comparison to just buying and holding Bitcoin. So the 44-day works pretty well. The 125-day also works pretty well. And so this is what happens when we use the 125-day simple moving average to bet on falling and on rising prices. Bitcoin is in white, the backtest is in turquoise. We can even optimize a bit of leverage, so we can go long with some additional risk, but then also additional return. And then this is our long-term outperformance. Every horizontal line here, that's a 10x. So this is a logarithmic chart. We move from this outperformance to this outperformance. So that's for the 125-day simple moving average. The 44-day works slightly better. So there are slight differences. If you don't want to trade too actively, just use the 125. If you want to optimize return, use the 44. Here's the 125-day simple moving average. Here's the 44-day simple moving average. And because trading according to that moving average is quite cumbersome, there's a lot of trading signals, I have created a capital pool to automatically execute those trades. And since we started that capital pool in October of 2025, we are making money, while Bitcoin, of course, went down. So that's the beauty of riding the trends. The outperformance can be massive. The last month's return annualized are 78%. The backtest indicates an outperformance versus Bitcoin of 115% per year. So this is a premium page of this channel of Bitcoin Strategy for automatic copy trading. It's all built on top of a decentralized finance protocol, a protocol that enables efficient trading and leverage and automatic copy trading. Hyperliquid is the largest so-called perpetual futures exchange. And I do think there is some security, at least in numbers. There's already 4.3 billion worth on the platform. And so our 3.5 million are just a drop in the bucket. The capital should be relatively safe. I think it's safer at least than if I was to personally hold the funds, right? All the funds are held by the platform and you can withdraw your capital at any point in time. There is no fixed lockup. And so instead of trying to find the few altcoins that might make money when the overall macro is bad, isn't it better to use approaches that historically worked very well? An approach based on statistics, an approach based on numbers. This is where I put my money and I'm very satisfied with the results. So if you want to co-invest in that strategy, feel free to check out Premium. It's currently $125 per month. You can simply sign up once, deploy your capital and then unsubscribe again. Of course, I hope that you will stay longer because besides copy trading, there's also a lot of tutorial videos that might be helpful for your long-term wealth building. But again, it's not required. If you just want to deploy your capital into the strategy, you can just get in, sign up, deposit your funds and exit again. A link to Premium pops up here on the screen. Looking very much forward to seeing you there. Thanks again for watching. See you next time on YouTube as well. Cheers.